Imagine a world where you could keep every dollar you earn in tips, no taxes taken out. Sounds too good to be true? That's exactly the hot topic heating up debates right now. As President Donald Trump's newly introduced no tax on tips deduction throws a curveball into the financial game plan for millions of American workers. But here's where it gets complicated. Despite the tantalizing possibilities, the U.S. Department of the Treasury even released a preliminary list in August, naming 68 professions that customarily earn tips at the end of 2024. However, there's a controversial twist. Some roles on this list may end up excluded from the benefit, as the details unfold. If your job is on the initial list, you're probably itching to find out what this means for your financial future. Yet, tax professionals like Thomas Gorczynski, a seasoned enrolled agent based in Tempe, Arizona, stress the wisdom of patience. My biggest advice right now is to hold off on any major financial decisions until more details are clear. In other words, don't rush to rearrange your finances before the rules are set in stone. Why? Because the finer points of this legislation are still in flux, and making assumptions could land you in hot water. And this is the part most people overlook. The real answers are still coming. Experts anticipate that the Treasury and IRS will release clearer guidance, possibly by early October, but the timeline remains fuzzy. Melanie Lauritsen, a vice president of tax policy at the American Institute of Certified Public Accountants, put it bluntly. We need much more guidance before we can confidently help clients with key tax planning decisions. The next big question: who actually gets to claim this juicy deduction? Here's where controversy brews. The current list of eligible occupations is only preliminary, and there's a chance some jobs may be dropped before the deduction is final. Plus, one critical restriction involves a category called Specified Service Trades or Businesses, SSTBs. These include professions such as healthcare, legal and financial services, performing arts, and sports. If your job falls into one of these SSTBs, you could be left out in the cold, a point that is sure to spark debate among affected workers. Adding another layer, your employment status may also matter. Are you a W-2 employee, or do you work for yourself? Tax rules often differ for each, and further clarification is needed so everyone understands how these distinctions will play out with the new tip tax deduction. Now, let's talk strategy. Savvy financial planners see potential opportunities here, but only for those who tread carefully. For example, you may try to lower your modified adjusted gross income, MAGI, to stay within the deduction's income limits, since the benefit begins to phase out for earners above $150,000. Some self-employed individuals might think about kicking in more towards retirement savings. However, it's still murky whether this could impact their ability to claim the full deduction. As Gorczynski points out, this deduction will be a key metric when planning with sole proprietor clients. On the flip side, if your job's listed but not clearly tied to the SSTB exclusions, it's crucial to develop a thorough understanding of the actual requirements. Lauritsen emphasizes, get a good sense of what the new law says and what it really means for your unique situation. Don't forget, it's never too soon to consult with a tax pro or financial advisor if you're worried about how these shifting rules might impact you. So, what's your take? Does the potential for a no tax on tips deduction excite you? Or do you see pitfalls ahead? Should some professions be deliberately left out, or is that unfair? How would this affect the work habits and financial security